Welcome to Global Investment Insights, a weekly podcast brought to you by ADCB Asset Management. My name is Kishore Muktinutalapati, Head of Investment Strategy. With an objective to empower you with investment insights, on this program we discuss various perspectives that are shaping the global investment landscape. Private consumption or household consumption accounted for roughly 68% of the US nominal GDP in the second quarter of this year. With that high contribution, needless to say that the fortunes of the US economic growth rely heavily on the outlook for consumers. Indeed, it was the resilient consumer that helped the US avoid a recession thus far in 2023. In this episode of the podcast, we take stock of the US consumer health and discuss implications for the broader economy. We look at this rather important segment through 5 different lenses of activity, sentiment, income, prices, and balance sheet. Let's start by reviewing consumer activity. Retail sales growth remains strong. For instance, during July, retail sales increased more than expected while the June data was revised higher. Core retail sales too registered steady growth. Anecdotally, a strong Prime Day for Amazon in July, which is expected to be the biggest day in the company's history, is a testament to the consumer strength. Overall, real consumer spending growth remains positive and has shown acceleration in July. Furthermore, looking at some of the latest trends, it's becoming clear that strength in consumption is not just a reopening story anymore. Instead, consumption is seeing an improvement across a broad range of categories that were not disrupted by the pandemic. Moving on to the second aspect of consumer confidence, both the popular soft measures of consumer confidence, the University of Michigan Consumer Sentiment Index and the Conference Board's Consumer Confidence Index have been improving in recent months. This is in line with the improvement in the broader economic sentiment and falling inflation. Turning to the third lens of income, it's worth noting that for a majority in the US, employment-related income is the key source of earnings. Here, the US job market remains strong. The unemployment rate has ranged from 3.4% to 3.7% since March 2022. Continued job gains and strong wage growth support the dynamic of higher income growth. A boost from the indexation of Social Security checks and other transfer payments to prior year inflation is helpful in this regard too. Now, thinking about the fourth aspect of prices, falling inflation has certainly helped in boosting real incomes, and this in turn can turn supportive for consumption looking ahead. The Personal Consumption Expenditures Price Index continues its disinflationary course with the headline PCE price inflation retreating to 3% on a year-over-year basis and core PCE price inflation falling to 4.1% year-over-year as well in June. Assessing the household sector balance sheet, which is our fifth lens, is important while evaluating the strength of the consumer. Household balance sheet remains strong with net worth to disposable personal income ratio remaining near its all-time high despite falling recently. Pandemic era excess savings remain a key source of strength for the consumer. On the debt side, growth in consumer credit has slowed in recent months after having risen sharply in 2022 and early 2023. Household leverage and debt servicing costs remain low by historical standards. However, restart of the student loan payments is likely to be a drag on growth during 2023. Overall, debt delinquency rates remain low while credit card delinquencies picked up recently. Taking all these together, we believe that consumer spending remains the source of strength for the US economy, with growth in that segment expected to accelerate through fourth quarter of this year. But we continue to monitor risk for this important segment, which could come from deterioration in sentiment or from sticky inflation. Thanks for listening. We hope you found this podcast useful. If you did, please do share this and other episodes with family, friends, and colleagues. For more information regarding our investment strategy and asset allocation, please reach out to your contact at ADCB. You can also log on to our website at www.adcbam.com. This is Kishore Muktinutalapati signing off.